Well, in the third quarter of 2024, Burry made a substantial shift towards three major Chinese tech companies. He increased his stake in Alibaba by nearly 29%, bringing the total valuation of that position to $21 million. He doubled down on JD, increasing his holdings to $20 million. And he significantly upped his stake in Baidu, growing it by 67% to about $13 million. Altogether, these three investments add up to nearly $55 million, which accounts for 1/3 of Burry's entire portfolio. Part of the reason behind Burry's big China trade likely lies in low Chinese valuations. China's stock market PE ratio right now is at only 10.2. The PE ratio is a way to measure how expensive an index or stock is. Right now, China's PE ratio is at one of the lowest levels seen since 1996. Despite historically low valuations, investors are still very pessimistic towards Chinese stocks. This makes China a polar opposite trade to US tech. Today, China's stocks have low valuation risk, but high reward if things do turn around. So what could potentially catalyze a turnaround in China? Well, for context, China's economy has been struggling with poor growth, a troubled real estate sector, and weak consumer demand. In fact, China's consumer confidence is at record levels since the 1990s. If people are not confident on the economy, then they are more likely to save rather than spend, which can lead to declining economic growth. This has caused the Chinese stock market to decline by more than 60% between 2021 and early 2024. To combat these issues, the Chinese government announced multiple rounds of stimulus in 2024. For example, in January 2024, China's central bank cut the reserve ratio requirement by 0.6%. Injecting around $140 billion to support economic activity. That caused this short-term rally in the Chinese stock market here, but it eventually gave back most of the gains. Then, in September 2024, the Chinese central bank announced interest rate cuts, mortgage rate reduction, and an equity market support plan of about $110 billion. These stimulus measures resulted in an instant 50% rise in the Chinese stock market. More recently, in October of 2024, China announced a $1.4 trillion package that will be spread over the next 5 years, and with the possibility of even more to come. Some have called this effort the bazooka stimulus because of its massive size. This signals the Chinese government's commitment to economic growth at almost any cost. These waves of stimulus are expected to have a significant impact on Chinese consumers. Data shows that Chinese disposable income, which is basically the money people have left after paying their taxes and essential expenses, is projected to grow rapidly over the next few years. After stagnating for the past 3 years, disposable income in China has finally picked up in 2024 and is now expected to increase by 50% in the next 5 years. This surge in consumer spending power could provide a major revenue boost for companies like Alibaba, JD, and Baidu. Burry seems to be anticipating that these stimulus measures will eventually kick in and fuel growth for China's biggest tech firms. If that happens, the potential upside for these companies could be enormous.